It's Cathal Rochford's turn to join me this week, and he's going to take us through the various benefits of tax planning in Spain. How are you doing?
I'm very well, Howard. How are you keeping?
I'm very well. I'm looking forward to September, which I think we do every year.
Absolutely. This time of the year, you kind of want the cooler temperatures to arrive.
Yes, especially these recent years.
Yeah, and things get a bit quieter as well, I guess.
Yes, yeah. Before we talk about why it's worth taking the time to review your tax planning and how you hold assets, let's start with some basics for listeners who may be unfamiliar with Spanish taxation. What makes you a resident in Spain for tax purposes, and what taxes do you then face in Spain?
Yes, a very important question, Howard, that I get asked quite a lot. So to your first question, the main test for tax residency in Spain is the amount of days you spend here. So the Spanish tax year is based on the calendar year. So if you spend more than half of the year in Spain in the calendar year, which equates to 183 days or more, you're deemed to be a Spanish tax resident, whether you've intended to become one or not. So that's the most important thing to just be aware of. Even with that, so temporary or sporadic absences from Spain are ignored for the purpose of the 183-day period, unless it can be proved that the individual is habitually resident in another country for more than 183 days in that calendar year. However, there are other criteria which are less common in practice, but we need to be aware of when it comes down to tax residency in Spain. So there's another rule called the Centre of Economic Interests here in Spain. And so how that works is that if Spain is the country where most of your economic or professional activities or assets are based, it is possible that Spain could deem you to be a Spanish tax resident on the back of that. So how this is compared is, let's say, for example, you had earnings in Spain and also in, say, the UK. If your earnings in Spain are higher than the UK or any other single country, Spain can also use the argument that your centre of economic interests are here in Spain. And there's another final rule that Spain have that can determine if you're a Spanish tax resident, and that's your centre of vital interests. So this applies if, for example, your spouse or your dependent children live in Spain. They can presume that you're a Spanish tax resident also, unless you can prove otherwise. So with both the centre of economic and vital interests, these are, again, less commonly used in practice. And generally speaking, if you can prove that you're a tax resident in another country, such as the UK, they will not apply. So it generally comes down to days. So if you spend more than half the year in Spain, there's no question you are indeed deemed to be a Spanish tax resident, and you should be, filing with the tax office in Spain, etc., etc. So overall, in terms of what taxes will apply in Spain, so many of the taxes that we have in Spain are somewhat similar to the UK, where people will be more familiar with. We've income tax, we have capital gains tax, you have succession tax, which is similar to inheritance tax. The one other tax that we have here, which is not in the UK, is Spanish wealth tax. And so that's another tax that we have to take into account, whereby, it's applied on a worldwide basis for Spanish tax residents. And it's something that we need to plan for all. So I won't go into too much detail on that one. But overall, the tax picture in Spain is quite similar to the UK.
Moving on to tax planning, let's start with the most obvious advantage, reducing your tax bill. There probably isn't much we can do about income tax on employment income. But what about on savings and investments and wealth? Can legitimate, compliant tax planning make a big difference to how much tax people pay here in Spain?
Yes, indeed. So income from work, for example, let's say your employment, salary and also pensions are subject to the general rates of income tax here in Spain. So there's little that can be done to reduce these forms of taxation. The general rates of tax usually range between 20 and up to 49% across Spain. So again, if you're working or you have a salary or pension, your income tax is going to be what it says. However, much can be done with respect to investments, capital gains, wealth, and succession and inheritance taxes. As many of our clients are retired, this is a crucial part of the planning and presents a major opportunity to reduce these various layers of taxation. Implementing a strategic plan to reduce these taxes can make a substantial difference in your annual tax liabilities and the amount of wealth you retain throughout your lifetime and what will pass down to your family and your beneficiaries in the future. Many expatriates are caught out by not reviewing their arrangements for their life abroad. Once you're no longer a UK tax resident, certain assets that were tax efficient back in the UK, for example, ISAs, UK investment bonds, they become fully taxable here in Spain. So there are many costly pitfalls to, not focusing on Spanish tax planning or retaining your UK financial planning bias. And many people unknowingly end up paying far more tax than they should here in Spain. Meanwhile, you could be missing out on alternative tax compliance structures that are available for Spanish residents that can legitimately reduce your overall tax liabilities and, importantly, greatly simplify your financial planning and affairs here in Spain.
There's a saying, don't let the tax tail wag the investment dog. Do you agree with this? And how can people find the right balance between tax and investment planning?
Yes, I do agree with that. And I believe that this principle applies more broadly. Most people don't move country or seek a new home purely for tax reasons. It's usually lifestyle led. And the priority is usually where, people want to spend time with their family, where they want to enjoy their retirement, and ultimately where they're happiest. This is why many people choose to live in Spain and across Southern Europe, which most of it's not, particularly low tax regions. And they prefer not to move to, say, a low tax, perhaps offshore jurisdiction. So the ultimate goal, I find, is that it's not the amount of tax they'll save over their lifetime. It really comes down to where is the best place and the best lifestyle possible for them and their family. So at Blevins Franks, our job is to tie the tax, estate and wealth planning together to make our clients' country of choice as financially efficient as possible. So in Spain, without this strategic planning, one could pay far more tax than they need to. But with specialist advice and re-engineering our clients' assets, income and estate, we can simplify, reduce and mitigate many of the taxes that and bring them down to a far more manageable level. With respect to investments, depending on the country where you live, there is generally an optimal structure to hold your investment capital. As I mentioned, in the UK, this would probably be an ISA. And many of these structures, however, lose their tax advantages once you move abroad. And overall, as a principle, taxation can make a good investment bad if the structure is not correct. So the tax side of things is very, very important. It's very important to know which investment structures are compliant and tax efficient in your country of choice. And this can greatly reduce your annual Spanish income tax and wealth tax liabilities, and also simplify your reporting to the Spanish tax office.
What about pension funds and pension income and lump sums? Can retired expatriates reduce their tax liabilities here in Spain?
Yes, that's a very good question, Howard. And this question, I guess, highlights the need to begin planning earlier in the process, and ideally start to look at things before leaving the UK. So on this question, there are things you can do prior to leaving the UK, such as taking your tax-free cash or your pension commencement lump sum whilst you're resident in the UK. You can generally take 25% of your pension tax-free in the UK. Whereas if you take the same 25% whilst you're living in Spain, it's taxable in full. And often people inadvertently take the tax-free cash when they live in Spain, and they believing it to be tax-free, and they can have quite a nasty surprise when they have to pay income tax on this 25% pension drawdown. Also, there are opportunities to consolidate and perhaps restructure your pension before leaving the UK. Many people have a lot of pensions built up over their career, and so consolidating the pensions prior to leaving the UK can be a good idea. Also, you have opportunities like a QROPS, or a qualifying recognised overseas pension scheme. And these pensions, these are really, they were set up to receive UK pensions for people moving abroad. And so they're very similar to, say, the likes of a UK SIP, but they have various tax advantages as well, such as they're exempt from Spanish wealth tax for Spanish residents. They have far more currency flexibility. They have estate planning advantages. And also they're outside the scope of UK lifetime allowance penalties, although they have been abolished should they return. QROPS generally are only available for people who haven't yet moved to Spain. due to a change in Spanish tax law. So these two areas, like your tax-free cash and the option to restructure or consolidate your pensions, they can lead to significant tax savings prior to moving to Spain. Once you have moved to Spain, there's not so much you can do in terms of minimizing your income tax at that point. Whether you're taking a pension from a final salary plan or a state pension or a drawdown from your defined contribution pension, it's all taxed as income tax in Spain. And again, there's no option really to mitigate that income tax. So to summarize, really the tax planning available on the pension side generally exists prior to making the move to Spain and to capitalize on these opportunities prior to registering as a Spanish tax resident.
Okay. Well, moving on now to inheritance taxes. Can people take steps to improve Spanish succession tax and UK inheritance tax on their estate for their family and heirs?
Yes, Howard, good question again. So overall, when you're dealing with two different tax systems, so the Spanish side and the UK side, it's very important to have a good understanding, ideally with the help of a professional, of both systems. You need to understand the rates that can apply and what opportunities might exist. Inheritance tax in Spain, or succession tax, works very differently to UK inheritance tax. Tax is paid by the recipient, not the estate, and the tax rate varies depending on the kinship between the person passing the money and the person receiving the money. There's also no blanket spousal exemption for succession tax in Spain. Succession tax and gift tax is due if the asset being inherited or gifted is located in Spain, or if the recipient is a Spanish tax resident when they receive the gift. So again, it's a little bit different than UK inheritance tax, which applies to the estate. Succession tax applies to the recipient. That being said, there is 17 different autonomous regions in Spain, and each region has the ability to, set their own succession and gift tax rates. For example, many regions in Spain recently improved or abolished succession and gift tax. Regions such as Valencia, Murcia, the Balearic region, and a couple of others. There is no guarantee, however, that these rates and exemptions may not change in the future, especially with a change of government, for example. So we must plan accordingly and stay abreast of any changing landscape, especially if there's a change of government in Spain. So overall, oftentimes your estate will have to contend with both tax systems, and planning things correctly across the UK and Spain can greatly minimise the tax burden on both sides and ensure that your family's wealth passes down to the next generation in a very tax efficient, timely way, and with the minimal interference of Spanish and UK probates and the minimal application of inheritance and succession taxes.
Probates always take so long, don't they? Really?
Absolutely. They can go on for years.
Yeah. Well, can strategic tax planning provide other estate planning benefits?
Yes, we strongly recommend having an integrated approach to estate planning, which often includes, as I mentioned, both inheritance tax and succession tax. As in some cases, both can apply to UK nationals who are living here in Spain. Many British expatriates remain liable to UK inheritance tax since it is based on domicile rather than residence. This means your estate could be liable to both UK inheritance tax and Spanish succession tax. However, it's important to note that a credit is usually given in Spain for tax paid in the UK to avoid any double taxation. So depending on your circumstances and intentions, it may be possible to shed your UK domicile and adopt a domicile of choice here in Spain. It does, however, present a great opportunity for long-time residents in Spain who are making the move on a permanent basis and are willing to cut certain ties with the UK. And if you achieve this and you can, shed your domicile in the UK, there is a potential saving of 40% inheritance tax on your worldwide estate. So overall, if you can kind of manage both tax sides, you can end up leaving the vast majority of your wealth down to your heirs. And one thing to mention is domicile planning is a very complex specialist area, so it is crucial to take professional, personalised advice on this matter.
If a British expatriate had careful strategic tax planning in place when they were still living in the UK, will this still need revising for Spain?
Yes, we strongly recommend doing so. It's important not to assume that the planning and structures that worked in the UK will translate and work here in Spain. This is a false assumption I've seen many times, and has been a costly mistake for many expatriates who kept retaining a UK planning bias. So it's crucial to review, assess and analyse the planning through a Spanish lens, and also take into account Spanish tax laws, rules and regulations. The tools that your UK advisor used will likely not work in Spain, nor are they permitted or authorised to do so post-Brexit. So I think a fresh approach integrating both countries' tax and financial planning is needed. At Blevins Franks, this is what we've done for our clients for almost 50 years. We develop a strategic financial plan, or what we call a financial roadmap, that covers all bases from tax, estate planning, investments and pension planning. And this covers the period of time from before you leave the UK, capitalising on any opportunities as a UK resident, planning the cross-border part and the immigration planning elements, and then finally the Spanish tax and financial planning that is needed on your arrival to your new home here in Spain. So overall, I would strongly recommend that people who are moving here to implement a new strategic plan that takes into account Spain as well as the UK.
Finally, what steps should people take to get the best results with their tax planning and to make sure their arrangements are compliant and suitable for Spain?
Yeah, it's quite simple, really. I would recommend talking to an advisor with an in-depth understanding of cross-border taxation, UK tax planning, Spanish tax planning, and how both countries' tax systems interact with one another. A company like Blevins Franks, for example, we've been doing this for a long time, and it's our main area of specialty. And it's easy to get DIY or do-it-yourself tax planning wrong, especially with the regulatory goalposts changing all the time. Expatriates have the added complication of having to deal with tax rules of more than one country at a time, and with global tax scrutiny is at kind of an all-time high. Getting it wrong could not only lead to an unwelcome and unexpected tax bill for you and your heirs, you could end up facing a tax investigation. So it's very important to make sure that your tax planning is not done in isolation or as an afterthought. It should be a fundamental part of your investment, pensions and estate planning, and an overall wealth management approach. Again, for the best results, talk to a suitably qualified and regulated professional advisory firm such as Blevins Franks. It will certainly offer the peace of mind that your tax and wider financial planning affairs are properly planned, compliant, and best positioned for your future here in Spain.
And of course, the Blevins Franks website at blevinsfranks.com is a fount of information. You can find your local partner, you can download podcasts, you can listen to all sorts of things. Many thanks, Cathal. It's always a pleasure and always very informative.
Thank you very much, Howard. I look forward to speaking in a couple of weeks' time.